Ladies and gentlemen, brothers and sisters, the clergy of acid, my beautiful heretics. Oh my god. Get to it, Hendry. It is Wednesday, the 8th of October, and Washington is still sitting at home twiddling its thumbs, refusing to do the arithmetic. Yep, day 8 of the shutdown. The economic scoreboard is black. We're flying in the dark. The statisticians, the economists, they've wandered off to stare at odd cloud patterns. I wish them well. And us, we're left with price as our North Star. And today, the faint glow of regional surveys trying to lighten our path. We don't need regional surveys. We know where we're going. Paul Tudor Jones told us we're melting up. I am Hugh Hendry. Who am I? I'm a rock star, but I was a former global macro hedge fund. I know it all. On TV, I was here, I was there. I had short hair. I was what was it? I was a young man dressed in old men's suits. But in 2017, I gave it all up. Sought a different life in St Barts. Tried to silence the blasted voices in my head. I remember telling people, I think I'm a paranoid schizophrenic. The voices tell me to do things and I do it. I spend your money. And then I'm paranoid. I'm fearful. I'm fearful because I only want good outcomes for you, and you. And yet, look at me now. Still a paranoid schizophrenic, couldn't shake the voices from my head. So instead, I'm sharing them with you every day as the acid breath. Now, I know this is my lament every night, but it is 22:22. It is 20 past 10. Let's get this done. Talking of which, did you hear the crackle last night? Was it crackle? It was a sonic boom. The thunder and the lightning. It shook the foundations of Blanc Bleu, my beautiful house. I swear. Foundations were rocking. I have never known a tropical storm like that. Wow. Just what are the gods? The macro gods? What are they trying to tell me? No more oogie. Take a break. Go chase after some sexy ladies. Fat chance. The island is vacant. We may as well be in lockdown. Everything's getting a brand new lick of varnish. Where are we? You know. But I grew up rehearsing control. A control freak I am. Picture me as a skinny, geeky kid in white socks and sandals, yes. A plastic grocery bag in one hand, sunscreen and a book in the other. And I'm patrolling an airport fence in Glasgow with my younger brother. Actually, there's a picture of the two of us. And we're wearing, why do I tell you these things? We're wearing blue tartan shorts of a very odd looking material. And we're wearing white Yogi Bear t-shirts. Anyway, we're on the outside of the airport and we're peering in. Me, I'm asking what it must feel like to escape this wretched grey place. I'm not a junior or a soon-to-be customs officer. No, I'm a renegade upstart, and I am intent on escaping and getting to St Barts. Perhaps did I know it even back then? But back then, I was soon to fly off to what seemed like the fantasy of Malta. My first flight, a foreign family holiday. But before then, I had to confirm a few things. I had to see it with my own eyes. I even back then, I had to backtest the future. Back at my parents' home, there were beds to assign. What does that mean? I would yell, I would scream at my brother, They don't make themselves. We make the beds. Make the beds? What does that mean? You know, like the sheets. Clean the house. We had potatoes to count and peel. I was on a mission to serve my parents. But at the same time, I dreamt of the bottle caps that I would soon hoard for pennies on my holiday. I had heard that you could exchange enough of these beer bottle caps. You could exchange them for gifts. Gifts. Not those stupid things you put on Instagram, but gifts. And I had my heart set on a foxtail keyring. And you know what? I got one. In fact, I got two. Hooked them onto my blue stay pressed trousers. I thought I was rather cool. It certainly beat the tartan shorts and the Yogi Bear t-shirt. I mean, maybe the Yogi Bear t-shirt would be kind of cool with the blue trousers. Anyway, I digress. Every day was like this. My God, there are tropical frogs. A chorus insisting that I get on with this. Every day, manic observations, risk assessment, practice, rehearse, repeat. I thought order would save me. I thought working harder than everyone else would save me. And I dreamt of every day as being like Christmas morning. The suspense of would the big guy with the beard, would he come delivering presents? In later years, it was would my crazy investment ideas, would they ever pay off? Was I the chosen one? And then you know what? What happened? Ashley, a blonde. She was from Scotland. She kissed me on the last fateful night in Malta and walked away, walked off the stage, leaving me to count, to remiss, to learn that control is a rumour and timing is a god. I was 12 years old, and that is the longest introduction in the history of podcasts. That is acid breath in a nutshell. A ritual that meets chaos at the door. And it goes, hey, it invites them in for breakfast. Come in and have breakfast, my friend. Let's have a good old long chat. So the Philadelphia Fed, and whatever they reported today, it turned up, it was a bit like that this morning. Like, come on, whoa, come on in. It was like a pub band that actually could play the hits. The Philly index, it had 12 points versus 10. It was a beat, a diffusion index. Now, there was a filthy decimal point in there somewhere, but I refused to play that game. A polite little beat that says the factories in the mid-Atlantic zone, they're not dead. They're okay. It's okay, people. We are okay. Softly does it, perhaps, but we're above zero. Above zero is growth. Below 50 is caution. Caution horses. I love that album. Anyway, another day, another diffusion index. Today, for scraps, we were presented with a whisper, not a roar. Scraps whispering, but maybe the market roaring. Markets, what did they do this Tuesday? This is not Tuesday, but it was like a disguised routine for Tuesday. We opened higher, we forgot why, we kind of had a cigarette, we sagged in the middle, we had an existential crisis. Then we regained our poise, and everything closed higher. We had the elixir. My God, really, I need subtitles. We had new all-time highs again and again. Remember, if the market kisses you and walks away by the close, you gotta learn to laugh and keep counting. But this market's not like that. The kisses never stop. I do wonder sometimes about Ashley. And you know, the keys to the first house my working class parents ever bought, thanks to Margaret Thatcher and trying to get people to own shit and take care and take on responsibility. My parents had their hands up in the air saying, yeah, we want to do that. Anyway, the keys to their first house arrived the day that Elvis died. That's how my mind files history. And markets, I think markets do it too. I think they do it too. Um, the tape tags every move. Every move's got a headline, typically written by some shitty journalist. Um, I do not call that fate. I just call it filing history. And today, as fate would have it, perhaps, but the Fed posted minutes that said, what did it say? It said, hey, we cut the policy rate last time, you don't say. Um, but we're really scared. But despite that, you know what? We're going to do it again and again. Just like we're gonna cut in October, we're gonna cut in November. And that was today's big news. A time capsule was served to us, the Fed minutes, an archaeology report at 2 in the afternoon, the dust blown off a meeting where they cut a quarter point, and all they could talk about was how their nerves were fraying. It was not the day Elvis died, but you'd think someone had. I say to you, the committee, it does protest too much. And I'm going to continue rehearsing my Kobayashi Maru plot from Star Trek. Just like that recon that walked to Glasgow Airport, I'm always pursuing knowledge. What's it like on the other side? Now, if you remember, last night, oh my God, we stretched to an hour. But last night we left with the Fed confronted with a no-win scenario. In the movie, that was the pending loss of the crew from the starship Kobayashi. Enterprise starship Kobayashi. The no-win scenario. An American economy humming from an expansive pandemic, the fiscal expansion, coinciding, as fate would have it, with an industrial revolution, bigger perhaps than the internet, the AI, the data centers, the trillions in private sector spend, the force of both colliding and amplifying and reinforcing. And then, of course, the lit up, the animal spirits of the Trump constituency offered hope of real change to make America better or greater or whatever. And I hope that carries strongly into the boardrooms of America. All of that almost certainly what? Almost certainly cements economic momentum well into 2027. Economic momentum is well baked into 2027. Oh, I must start writing scripts, forgive me. America domestically is an economy that certainly does not require a rate cut. But remember, we had 5.5% risk-free rates. Japan at almost zero. Those rates are the envy of the free world. Those that don't have, well, even those that do have closed capital accounts, because their central banks can direct money and chase those high risk-free rates. What is that sound? It's the world's capital being sucked into America, being called American exceptionalism, inflating domestic assets, asphyxiating growth in the rest of the world. Remember, again, the pendulum, the dramatic change, what did I say last night when I was presenting at the Investment Policy Committee in Edinburgh in 1994. And the British pension funds that we looked after had a 3% of NEV position in US equities. Imagine 3%. Imagine what that figure is now. The world's capital being sucked into America, not because of high interest rates, but because it's doing so well that the expected rate of return on risk taking is probably approaching 15%. But the overseas lobby, and let's call it Japan, let's call it Europe, maybe China, they would never tell you. But they're saying, God, Uncle Sam, normalize your policy rates. You're killing us over here. And yet the Fed knows the empirical data from the 1990s and from the 1920s tells them that if you subjugate the domestic economy, you will have a melt up in domestic asset prices. Just as Paul Tudor Jones said, is now happening. So my inspiration, did I have inspiration? My jumbled thoughts. I'm trying to unpack these thoughts. But I'm trying to posit a supposition. Love that word. Makes you sound very academic. That the Trump tariffs and the entire saber rattling, I'm a crazy guy, the art of the deal, seems very well timed. It's a reset. It's the pushback on the rise of mercantilism that I've long craved. And it's delivering, not just intent, it's delivering concrete actions to change the trade dynamic that's left America vulnerable. Vulnerable, we saw that in the pandemic. No supply chain, reliant on others. And weak, a speculative economy shorn of its productive capacity, with many of its citizens, I want to say, destitute and angry. A great need for a policy of fighting back. A very obvious policy, but long rejected by politicians of both parties. Why? Because of the dangers upsetting the status quo. But more than that, the bribe of mercantilism is the flow of money that bids up asset prices. Target that, target the money-making machine, and there's a clear and present danger with regard to the level of domestic asset prices. Yes, you free the worker from the tyranny of no hope, but maybe at the expense of an asset price reset. And there are not many politicians that vote for that kind of turkeys and Thanksgiving. You know, that's not how we do things around here. The president in the Oval Office and the wise man. That's not how we do things around here. Blind economic dogmas. The 100 economists writing in the London Times in 1981, proclaiming that Thatcherism, change would bankrupt the bankrupt British economy. Do you get that? It was already bankrupt. You know, like 3 or 4 years earlier, they'd gone cap in hand to the IMF seeking a bailout. That's what I think of when I hear of Larry Summers. Pinching, Larry. Larry is the dogma, the blind economic dogma that really hasn't got a lot of glory behind it. But he has gravitas. I do not know why. And there he is, bitching on my good friend Steve Miran. I can't call him my good friend, but bitching on Steve. Steve's first Fed governor speech. How dare you, Larry? Do you know I had a platonic girlfriend, and she had a great summer intern job at the White House, and she worked with Larry Summers, or she certainly came into contact with him when he was Treasury Secretary. Give me Scott any day. Scott versus Larry, no contest. And Larry's like, hey, it's my name on the dollar bill. I'm the Treasury Secretary. Yeah, Larry, go and jump off a cliff. Anyway, so the Fed, Kobayashi, Maru, Trump. Why? Let's get kooky here, but why not wage a good war now? What an amazing time! Wage it now with domestic growth, which is absolutely baked in by these 6% fiscal deficit spending programs. And what are those seven AI stocks? What are they spending a year? Over $1 trillion, and I think it's going to ramp to about 3 trillion. 3 trillion is 10% of GDP. Surely it's, this is kind of Captain Kirk. Let's cheat. This is the time to take economic chances to revitalize the American economy, to capitalize on the promise of this industrial automation revolution, and to regain the necessity of a domestic industrial supply chain. So why not launch a series of controversial, in inverted commas, policy steps, tariffs? Larry and the gang, oh, but they're inflationary. Larry, of course, during the COVID, the supply shock, yeah, it was going to be permanently higher inflation. Well, 9 became 3, Larry. And tariffs, it's a tax. I do not understand why people are not getting this. The US is expanding the tax franchise beyond its borders and is getting its allies to spend more on defense. So the bloat of the US government expenditure, does it recede? Unlikely, fat chance. But at the margin, better. So we're setting in store a remedy for the fiscal dominance. Tariff taxes might just allow some deficit management, even if the economy swoons. So I think what they're all missing is the Trump team. There's a genius locked in the cupboard somewhere who sees this as being a time to play dare and restore America, make it great again. It's never been an opportunity like this to, again, let's take the blind economist thing, to act irresponsibly. It's an opportunity to solve the no-win logjam. Let me explain. Because all of this tumult, all of this controversy, this economic revolution, and the consternation of the middle brow, it left its mark on the first half of American GDP growth. As sure as it is the locomotive engine of the world just now, first half GDP growth came in certainly less than was expected before Trump's election. A lot of hiring and spending decisions had been deferred. And of course, AI on hiring is month after month after month. You just feel that AI is coming in and boardrooms are going, I don't know if we want to expand. Companies, the last thing they want to do is hire and then fire. So disruptive. The Guardian newspaper, there's a political ideology that says company executives are malevolent. They are not malevolent. one of the reasons is because malevolence is not good for the bottom line. Anyway, I would say to you that all of this consternation and 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 shaking up and I'm putting a brake a little bit, on the economy, like seeking is it remedial change? Profoundly fundamental, root, stock, branch change to the organization of the American economy. You're kind of taking chances with economic growth. So take chances when economic growth is really, really robust. Because the grey men, the guys with their minutes today from the Fed. They cut rates. That's what they do. What did they say? Most participants judge it likely appropriate that they will ease further over the remainder of 2025 and 2026. Path is lower. 25 in October, 25 in November, and heading to zero in 26. So it's a good. So then you get more monetary stimulus, but you're making fundamental improvements, much needed improvements to the American economy. It's just delicious theatre. The Feds, like this, I mean, do I trust them? I'm not sure. I think I do. I think they are. They do not get the Trump and the Bessent deal. And are they setting them? They always set themselves up for an asset bubble. That's what they do. And the asset bubbles give you bust. Who would dispute that? Seems to be the clear message from the gold destroying that 4,000 barrier. Like it's the speed of sound. But still, I say there is more. There is a better world somewhere out there. Even if stock prices ultimately crash, there is a stronger, healthier America that can fight back against the mercantilism and kind of old school fascism of China. So the comedy of today is that the minutes, the old news, are still the loudest thing in the trading room. It's like playing back last month's voicemail on the squat box. And yet the traders cheered because the message fits the mood of the room. Yeah, the big news of the day is a photocopy. And then again, special shout out to Steve Miran. Miran, I don't know. Can I tell you a little secret, a little nice? I hope Steve wouldn't object to this, but I had a tweet where I was like lambasting the Financial Times. They had the most appalling, uh, slanderous piece on Steve, saying they'd been to Europe and closed door sessions trying to explain the ideology of the new Trump administration to some of the big heavy hitters in the world of finance in Europe, and they weren't. The Financial Times article was saying it didn't go down well, and so there was no one brave enough to give their name as a quote, but the quotes were written in the article, and I thought that was deplorable. And Steve, busy guy that he is, but we're all human, and it's kind of nice when someone's got your back, and he reached out, he sent me a message, so I do like Steve. And you know that from the archaeology report of the minutes of today, that we know, of course, that he wanted he was the only dissenter. He wanted 50 basis points in cutting. And the reason he's got this mantra about housing disinflation, all to do with population dynamics and lags. He says that the shocks, demographic or population shocks, are really much faster than you'd think. Much too fast for the grey men at the Fed to actually dare to do something about it. But not Steve. His point is between 2021 and 2024, a different administration, a different political prejudice. But America received 1 million extra bodies a year crossing borders. That's not a theory, that's people, teeth, rent contracts, a desire to eat tacos, perhaps, car payments, repayments, and housing tightens and service jobs, and throw in the recovery from the pandemic. Service jobs go from help wanted to please start Tuesday. And you can't argue about the queues that formed outside probably inglorious apartments, but viewings. And then in 2025, you flip the sign, you flip the politics at the border, and the flow fades from 1 million to something way less than 1 million. And landlords, they blink. So the same landlords who were raising rent, that guy's now checking his phone, it's gone quiet. And so Steve's arguing, like, listen, if you set where we should have interest rates, if you set it by the next 6 to 18 months flow, then you're going to catch the downshift. You're going to make a difference. And what he's saying is like, hey, listen, the neutral rate, the level where you've got to get interest rate, Fed rates down to, so that they're not a brake on the economy, it's a lot lower than you bozos think. And the reason is the positive population shock of the last 3 years allowed the economy to run hot. And we're going to need that hot streak again as we push in these tariffs and this reorganization of the industrial sector. But population growth going to zero or fading to somewhere closer to zero, it's a negative shock that cools cools the thermostat, the inflation thermostat. So population is Steve's argument is population is not a story about 2050. It's a story about next quarter's rent, next quarter's hiring, next quarter's where the interest rate should be. And so his point, I think last week we were talking about the PCE, oh my God, price composite. Oh my God, what's it called? PCE. Look it up, people. PCE, prices, price and consumer expenditure. Forgive me. And I don't know if I mentioned it, but they have a proxy for inflation. They make it up. They make up how much you pay for rent, how much, and how much like the house in the inflation in the house stock. And they use economic models, and they make them laboriously slow, and the slowness is leading to the overstating of where rents and housing inflation is today. It seems more a reflection of when 1 million lost souls or otherwise were crossing the border. That's Steve's point for lower interest rates. So now for the tricky part. How the hell do I get to bed? How do I wind all this together under the headline of the Kobayashi test? It's like last night on repeat. The Fed trapped by American growth, a high policy rate, much higher than the rest of the world. The capital, the world's private and sovereign capital, flooding into American capital markets. Asset prices, what did Paul Tudor Jones say? Melting up higher and higher. And the rest of the world pleading for the Fed to relent and cut rates. But a world where America has become the locomotive of economic growth and does not need to reduce interest rates, owing to the much mentioned fiscal policy being very, very loose. The capital flows into America and the AI revolution. And in practical terms, Bank of Japan is a great representation of this. Currencies move 40%. I cannot stress that is such an enormous number. The devaluation of the Asian tiger economies. Shut up! Bloody shut up! Frog, shut up! Oh my God, it's not listening. Yes, I was having a conversation with a tropical frog. Japan, what's I saying about Japan? Yeah, 40% devaluation. And it's like, yeah, we're going to raise interest rates. We're going to raise it. So the Fed goes from nothing to 5.5. Japan's like, yeah, we can do that. And they can't. They cannot. Japan is trapped like the Bank of England. If you remember, in 1992, they jacked rates all the way to 12%, trying to take on the Treasury Secretary, Scott Bessent, and Stan the Legend and Soros. We're at 12 and we're going to go to 13, going to go to 14, going to go to 15%. The Bank of England claimed, or its political masters, Norman Lamont claimed. And the wisest guys in the room like shrugged their shoulders and said, don't believe you. We don't think you're going to go the euthanasia route. And that's Japan. Debt servicing and repayment of existing outstanding JGB stock is a third of total expenditure already at zero rates for the Japanese government. So imagine the Bank of Japan at 5.5% Fed fund equivalent rates. Ain't gonna happen. The whole house of cards comes stumbling down. And so it's like, I said the Bank of England in 1992. I could have said the Bank of England. Under Norman, what was his name? The Bank of England governor in the 1920s, persuading Benjamin Strong to cut rates. It's Benjamin Strong. Trump wants to be strong. Being persuaded, hey, if you can lower your interest rates, then that makes it a lot easier for us to resist higher rates. And that's going to be a good thing for the family, the global family. But here's the rationale, I think, from people like Steve, from the brain trust within the Trump team. Like I said yesterday, the best part of 300 billion US dollars has already left the banking systems of emerging market countries and gone into America, into dollar stablecoins. Standard Charter were saying the next 3 years, another $1 trillion is likely. That is capital flow. That's the kind of high-powered money, the equivalent of gold flowing into the US in the 1920s. The flow that underwrites private banks and encourages them to underwrite more credit growth. And more credit growth gives you more economic growth. That is, the gold flow is the dollar collateral. We're on a dollar collateral, treasury collateral system today, not the dollar standard. The dollar, not the gold standard, the dollar collateral system rules today. Treasury collateral being borrowed offshore, hypothecated, rehypothecated, dollars being created, credit being created, the grease to further economic growth and almost certainly higher melt up like asset prices. Benjamin Strong's Fed immunized those gold flows in the 1920s. They short-circuited the credit mechanism. And that was a fix for the domestic economy, because the domestic economy was really, really strong, obviously. And the Feds didn't want the banks multiplying that pressure more via lending. Oh my God, these frogs are so loud. With more domestic lending. But in immunizing, they broke the global trade system. The whole idea was that the American economy should have grown even stronger and sucked in imports and let capital be retained in the rest of the world to service growing economies in Europe. Immunization stopped that. The Chinese have done the same thing with their mercantilism. They have an immunization, which is the dollars from the export flows are they're never put into yuan, they're kept in dollars and held. They were held in dollar risk assets. Now they're being held in dollar collateral via um, very, very poor African and emerging economies with large commodity resources. I've discussed that before. I'll put you in the direction of some of my papers. So Trump, he doesn't want to break the system. He just wants a better system. He doesn't want immunization. And so I think the deal, and there's been a deal, the deal with Japan. So Japan, why Japan? It's the largest holder of treasury bonds. The sovereign is probably part of the American-Japan alliance. There's a lot of things we don't know. But it's no longer needed, that agreement, because the stable coins are doing the heavy lifting. The Genius Act. The fact that $1 trillion is likely to come in from emerging markets and then from other parts of the world. That is high-powered money coming in rapidly into the American economy. It does not need the Japanese holding treasury bonds. Now, we all know that their debt is 2.6 times GDP or so. But less noted is the gigantic foreign reserve assets. So Trump, I'm making this up, but Trump says to Japan, to the new lady running it, he's like, honey, I don't need you buying my treasuries because I'm over here stateside and I'm about to suck down on $1 trillion out of emerging market banking systems. No, I want you to take Japan's sovereign balance sheet and not own treasuries. But I want to push you along the risk frontier. I want to move the aligned countries. I want you taking more risk. All I want from you is that you take equity stakes, that you don't buy treasury cash bills. I want you to help invest in how I bring manufacturing onshore. And you know what? If you do that, I'm the best friend you ever had. And I'm kind of going to look the other way as your currency slides, as your exports boom, and as your share prices take off once more. In fact, I welcome it. Let's face it, there's no other way you're going to get growth. And listen, the more cantankerous I am, the more I get to press and implement my controversial trade and economic agenda, it's possible my economy weakens. And I'll get rates back down to zero. And so I'll give you this. I am kind of your savior, but you got to finance me big with equity. And you know what? We'll have a sovereign joint wealth fund. It's going to be fun. It's going to be fantastic for your corporate profits. That's what the Nikkei smells. And then Trump probably goes on, is like, and you're my flank against the Chinese. Chinese are the enemy. They ain't getting this deal. Only friends and family get this deal. We're going to keep that red cabbage tight with the dollar. They're not allowed to devalue it. And their face says they can't do it anyway. But we certainly will not permit them to do it. So I want Japan and Korea to gain super currency competitiveness against the might of the Chinese mercantilist. That's what I'm thinking with these blasted frogs. But now I really must go. I want to see my bed. I love you all dearly. Bugger. One last thing. Robert wrote in from the UK to say, I'm loving my 30 minutes of Hugh every day. I'm sorry, it's now 60 minutes. My question for you is, what is your exit strategy for trades that are successful? Is it sell half after a good run, or do you just sell out completely? Thanks, Robert. Well, Paul Tudor Jones says, you run. If the narrative that led you to buy the stock. If it ain't changed and the price is above that 1 year moving average, you should stay fixated and fully invested. Practically speaking, and I'm not Paul Tudor Jones, I would, however, do some trading, kind of along the lines that you suggest. Because there's a point where you're so far above the one. If it's been a really successful investment, you might be trading 100, 150% above the 1 year moving average. Now, that will pull the moving average higher. But every 18 months or so, I would say to you, there's a huge probability that the share price, even for a business that's really working, is going to come back to the moving average. Now, that may be a mean reversion to a point higher than where the average is today, because the more that the spot price stays where it is, the more that the 1 year is going to climb to meet it. But imagine you had 5% of your portfolio goes and it triples, hallelujah. And it's, and it's 100% above the 1 year moving average. It's just, you got too much risk running on the likelihood of a mean reversion. So I'd want to trim it up there. You'll never get it right, but I'd be trimming, but only with the proviso that I'd be absolutely rock solid in my determination, that I'd be seeking to put that money back to work should the stock revert to that 1 year moving average. And you've got to write it down. Trading demands focus. This isn't what did I say the other day? The losers, a log for losers. It's just a trading log. All of this is probably going to play over several years. And you're going to be tempted to take on new names. But promise me you'll stick to your winners. Anyway, right. God is dead, but God bless you all, and good night until tomorrow. This is Hugh Hendry, and I'm out of here. Bisous, my friends. Bisous.